Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi all, welcome to Business Line's State of the Economy podcast on commodities. Gold and silver are continuing their bull run. For the past few weeks, gold has been reaching fresh highs frequently. Similarly, silver has also been rising. Tariff war unleashed by the US, geopolitical fears, and concerns over the global economy are fueling precious metals. Along with them, copper is also gained, though for different reasons. What's happening in these markets and why? To enlighten us on this, we have with us Mr. NS Ramaswamy, Head Commodity Desk and CRM, Ventura Securities. Welcome to Business Line's State of the Economy podcast on commodities, Mr. Ramaswamy. Gold has been shining over the past 15 months or so. Where do you see gold heading in the global market over the next couple of months? What are the reasons?
Yes, it's given a fantastic returns of over 35% in the past 15 months or so. Basically, international gold going forward for a couple of months, the projections, a bit of a minor correction is what expected after a good rally that's happened, where gold is right now close to around $3,120 per ounce.
Fine, sir. What will be the impact of soaring gold prices in India? What sort of impact will it have on gold demand?
Before that, I would also like to continue the previous question wherein I am expecting the medium to long-term bullish trend in the gold prices international. Because even if the trade deficit numbers which got announced for the month of February of US, it's still showing a trade deficit of on the merchandise part of it is showing a $147.90 billion, which is quite a bit inflation upside, and the trade deficit and the fall in the consumer spending is likely to bring about an economic slowdown or even a stagflation fear. And so medium to long term, gold is likely to scale up very high on the short term when I mentioned a correction, but on the long term, medium to long term, we are expecting a very bullish trend to continue in gold, because the interest rates are definitely likely to come down steeply around 75 basis point, or even a 1 basis point cut in 2025 is what we are expecting.
Fine, sir. I'll go to the second question now.
Yes, sir.
What will be the impact of soaring gold prices in India? What sort of impact will it have on gold demand?
Basically, jewellery, if you were to see, we already have a 70% of India's total gold demand is on account of jewellery demand. Investment demand makes up the rest, so 70% is almost contributed on the jewellery part. So jewellery demand would remain a bit subdued because of the higher prices scenario which is getting absorbed in the market. So I feel out of the close to almost 2,16,625 tons above ground, we almost have 97,000 to 98,000 tons in the form of jewellery, which is forming around 45%. So if you were to see the Q4 of 2024, it was a flat jewellery demand which has come up is around 265 tons. So I feel households in India basically work on a budget. Once gold shows up, then within the budget, they would be going in for jewelry, but it will be lesser consumed. The quantity wise, it will be lesser consumed. That we can see that happening right from the fourth quarter of 2024, and this could also percolate going forward. So it's basically households in India work on a budget, and that budget is going to constrain or restrict them from building up more quantity of gold.
Sir, silver has also been gaining in tandem, and if you see, it has given better returns, and there is a physical shortage too. So, how do you expect silver to behave over the next couple of months?
If recession and stagflation is one of the driver which we just mentioned for the gold prices, in that case, manufacturing activity would definitely contract. So when I say that, it is putting a negative pressure on silver. So while gold prices will continue to rise, but that could send the Gold silver ratio also higher, and industrial downturn could hurt actually silver very disproportionately. See, basically, physical storage of silver is what you just mentioned is just a wild card for silver. The primary concern is about the wheels of the economy in the manufacturing activities, whether that is set rolling or not, whether there is a demand which will pick up. So unless and until the manufacturing activity and the demand factor is going to give a trigger in silver, only then this is likely to go up. So we expect that the range of in dollar terms internationally, silver would range between that $34 per ounce to $36 per ounce. But when it comes to domestic prices or the Indian rupee conversion to silver, we are expecting close to around 1,05,000 or 1,10,000 at best in the rupee terms, because we need to really see rupee depreciation should really happen to 88, 89 if we were to see a good rally in silver. But that's not the scenario now. USD INR is a bit of an appreciation mode. It is still ranging in that 85 to 86. So that's where silver stands at this point in time. Although the physical shortage is one wild card for silver.
Sir, how will silver demand be in India?
India announcing like the renewable energy and other grids which we were talking of. Even Russia came out with big plan, China came out with big plan. India also came out with some $109 billion renewable energy grids and things like that. So unless and until those, which I am quoting it from the Silver Institute of America, that the demand factor and the supply factor which they said, and Indian demand will shape up a bit later. We don't see anything great happening in the short to medium term. Anywhere beyond 9 months to almost 1 year, we can expect some demand pickup. At this point in time, there are no comments as regards the demand pickup because the renewable energy grids are still not started in a big way, which should give a kickstart for silver.
Sir, and what are the upside and the downside risks for both gold and silver?
The tailwinds, if we were to say, gold prices would be a further decline in the US dollar or the treasury yield. Now, as we see dollar index still hovering in the same range, it's not yet broken down below 103.75, 104 range and fallen down to 102 or less than 100. Neither is it gone to 106 and 107. So the tailwinds for gold prices would be a further decline, which I am expecting in the dollar, and also the treasury yield, which is likely to be tamed down. Because the yield is actually the direction of the yield is impacted on the growth downside rather than on the inflation upside. Ideal situation should have been with the tariffs, yield should have still shot up and gone up. But the growth concerns and the growth downside are the biggest concern, which is happening towards the treasury yield and the dollar. So I find these are the tailwinds for the gold prices to move up further. And the headwinds are, again, as we cited about the profit taking as a gold has really rallied. So a stronger dollar after the breakout of 104 levels, if it were to rise, or any fewer rate cuts, which is it likely to come up? As of now, their rate cuts are almost decided for 2025. It could be anywhere in the range of 50 basis point to 75 basis point or a one interest rate cut. But the headwinds are how well they would be taking up on those fronts.
Besides gold and silver, copper is the other commodity which has been gained. Now, where is copper likely to head?
No, it's copper. It's likely to remain subdued. Basically, there is a subdued demand. It's finally, if you were to see the China's real estate sector, China, when I quote, China is always one of the leading indicator towards copper. So weakness in China's real estate sector or weaker than expected growth in the entire in major economies and China are putting a cap or a lid towards copper, and it is likely to remain subdued. I don't I feel global industrial or manufacturing activities it's indicating persistent weakness. So although supply constraints will be there, but these are the factors, and how best China will unfold towards its industrial infrastructure investments and how would they come about is what is to be seen.
Thank you very much for your insightful views, Mr. Ramaswamy.
Thank you,
Very
Mr.
enlightening.
Subramani.
Thank you, listeners, for tuning in. Until we meet in our next episode, this is Subramani Mangambu signing. Bye.